Thank you, Mr. Chair, and thank you, Governor Powell, for being willing to take on this responsibility. I'm encouraged that we're having a conversation about our debt, and I appreciate the conversation you and I had privately about it, and I like your considerations on that. I'd like to remind the committee, you know, in the last 16 years, we've added $14 trillion to a $6 trillion debt at the end of 2000, 4 under President Bush, and 10 in the last administration. And in that last administration, we had the lowest economic growth in United States history. In the next 10 years, if we do nothing from today, this federal government will add $11 trillion in current dollars to the current debt. So we'll end up, right now, the current projection is if this government doesn't change the way it does business, we'll add $11 trillion to the debt. In 2000, the size of the federal government, Governor, was $2.4 trillion in constant dollars. Last year, it was $4 trillion. There's our problem. We collected more tax last year than any time in our history. And the year before that, we collected more tax than any other time in our history. Globally, we have $200 trillion of debt. Of that, 60 is sovereign debt. Of that, 20 trillion is U.S. debt. And yet, a number of countries have interest rates in their sovereign debt that actually are put out at negative interest rates. And I don't think the world's ever seen a situation where we had the 4 major central banks with somewhere around $18 trillion on their balance sheets, and a situation where we have $200 trillion of debt, of which 60 is sovereign, and of that, a significant number is let out at negative interest rates. As you think about restructuring your balance sheet, what concerns you relative to the size of government debt, sovereign debt around the world, and of that, the United States being 1/3 of that sovereign debt in terms of how you are going to manage one of the 4 major central banks going forward?
Thank you, Senator. So I think we have a good plan, and I think the market agrees to shrink our balance sheet. We've laid out very clearly in a series of public minutes over 3 meetings over the last year. I think we were quite careful to socialize the plan, and the market has accepted it, and it will lead to a much smaller balance sheet, and it'll do so over what in these matters is a fairly quick period of time, 3, 4, 5 years, kind of a range of things. So,
are there any? I'm sorry to interrupt. Are there any assumptions in that calculation or in that thought process of the freeing up of capital on the private side, and in terms of the money that's withheld from being active in the economy today? Some estimates as high as $6 or $7 trillion are not at work in the U.S. economy right now because of fiscal policy, not monetary policy. Does that weigh into that decision?
Actually, it doesn't. What happens, Senator, is that when we allow a security to roll off, the Treasury will reissue a comparably sized security, or in bulk, the same amount. The U.S. government debt will remain the same. It'll just be issued to the public rather than being on our balance sheet. That's what will happen. So it doesn't add to capital. You point to the other central banks, and their big balance sheets, but they're some way behind us, and ideally over time, all of our balance sheets can shrink.
But all 4 of the balance sheets are around $4.5 to $5 trillion right now. It's the highest they've ever been, and so I applaud your background, and I applaud your ability to deal with that. I'd like to change subjects in a minute I've got left to talk about blockchain technology. It's a little bit off the wall, but I think I'm beginning to be very concerned that we have another bubble that is some 4 or 5 times the size of the dot-com bubble in the late 90s, and that has to do with the cryptocurrencies like Bitcoin. Bitcoin's market value now is bigger than all but 29 of the S&P 500 corporations in America. Assuming that this continues, and talking about that bubble, and the size of and the growth of the use of these cryptocurrencies, if that continues to grow, to what extent will that affect your ability to affect results from your typical monetary policy options that you typically have as a central bank?
In the long run, cryptocurrencies of that nature could matter. They don't really matter today. They're just not big enough. There isn't anywhere near close to enough volume for it to matter for us.
Well, that was the problem with the dot-com bubble, too, on a different level, was there were so few entities, and there was so much money interested in chasing it, and that's what's happening right now in the Bitcoin area. But the growth of that area was much, much faster than anybody thought at that time, too, in the late 90s.
Yes, there's no question the valuations have really gone up quite a lot in the last year or so. I don't have a view on the appropriate level of the valuation, of course, but again, from our standpoint, cryptocurrencies are something we monitor very carefully. We actually look at blockchain as something that may have significant applications in the wholesale payments part of the economy, something we pay close attention to.
So you're watching what Alibaba is doing in Asia today relative to blockchain technology.
We are watching all of those technologies. It's something we have to do, I think, and something that's actually kind of enjoyable and interesting to do.
Well, thank you for being willing to do this. Thank you. Thank you,
Thanks,
Mr.
Senator.
Chairman.
Senator